Well, the surprise resurgence that we've seen since the start of the year has strengthened and broadened over the last month or so. Auction markets, prices, consumer price expectations, all pointing to further gains in what is a very tight market. That said, there's reasons to be fairly wary about the sustainability of gains. Firstly, it's not coming off interest rate cuts, and most consumers don't expect rates to move lower, they expect the rates to move higher. Looks like the interest rate support's still a long way off. Affordability is still very stretched. For most buyers, the higher costs of finance has more than offset the lower cost of properties over the last year. And more generally, the style of recovery, a price-led upswing, tends to be harder to sustain and can sometimes become problematic if it becomes driven by investors, for example. So we're wary about the sustainability of gains. Further price rises, for example, could see owner-occupiers back off again quite quickly. On balance, we think the market's going to be erring more towards flat than gains this year before we move into the RBA easing cycle in 2024, which gives us a more sustained upturn. But certainly it's continuing to surprise with the bounce back, and there are some genuine drivers in terms of population-driven demand for property outstripping supply. It's a delicately balanced outlook. A lot will hinge on how investors respond to the environment. Whether we see lift in investor activity may be an important swing factor for the market, but on balance it's looking like a pretty well sustained recovery.